The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen. Thank you for being with us for this webinar this evening. Good morning to our friends down under, including Mick D, who's the first to jump on the question box and say loud and clear, so that's great. And in the Hunter, Hank as well. The Aussies are on top today. Great to have you with us, guys. And I said good morning to our friends down under, and good afternoon to those across the ditch in the land of the Great White Cloud. All doing very well over there, aren't they? Peck Sim's with us up in Kuala Lumpur. Lovely to have you with us, Peck, and hope the beautiful Peck Sim is well and happy today. Goodness me, there's so much happening, isn't there, guys? It's everywhere. We've got Lord, here we are. Albert's with us. Anthony down in New South Wales is with us. Brent's with us. Carol, special greeting to Carol. We don't have many lady members. I wish we had a whole lot more, but lovely to have you with us. Edward, George, Graham over in New Zealand. Good to have you with us, Graham. I hope you're working your way through those paper trading exercises. We need them. Greg in California. Greg, I've been meaning to call you all this week. Circumstances have transpired against us, but I will call you tomorrow at 6 p.m. your time, as you suggested. And looking forward very much to talking with you. Greg also, let's see, here we are. Hank's with us down in the Hunter Valley. Harold's with us, the chief of the gold bugs up in Redding, California. Great to have you with us, Harold, and J.F. and Katarina down in Sydney. That's my daughter. And, of course, the state of Queensland is in lockdown. You can get out, but you can't get back in. My daughter's just finished her first-year medical exams after turning her back on being a lecturer at Bond University and other opportunities, and deciding she wanted to do medicine. So she's down in Sydney. She's finished her exams 2 days ago, and she can't get back to see us because come into Queensland, you have to have been out of any COVID nominated area for 14 days. If not, they'll put you into supervised quarantine here, and that option doesn't sound too good to me anyway. We'll see what we can do. But Bodie, lovely to have you with us, darling. Okay, Keith's with us. He's a tutorial guy. Good to have you with us, Keith. And Mark's the original tutorial guy. Mick D, wonderful, great friend of mine, wonderful trader. Murph, of course, the Murph wouldn't be a webinar without Murph. Milton's with us. Norbert up in the far north, up in coal country in California. Peter K is doing a tutorial right now. In fact, his next session's an hour after I finish with you folk today. Philip's with us. Rob across there in New Zealand. He's Rob H. He's a very skillful, a very knowledgeable guy, and really understands markets very, very well. Scott's with us. Great, on and on we go. Okay, Toddy's with us over in California as well. Great to have you with us, my friend. Okay, Rob, can we ask some US members what they think of Trump just calling everyone to arms against fraudulent voting system? Wow. I saw that was coming up. I didn't actually hear it, Rob, but there's actually a very interesting article in Zero Hedge today, which does have some unique insights. And also there are times when it's not quite on the mark, but they do very well. I read a lot of their stuff. I find it interesting, and some of it's very amusing. But one of their readers has pointed out that typically the down market ballots for senatorial positions closely mirror the presidential poll. In other words, if you're going to vote Democrat for the president, you're likely to vote for a Democrat what they say down ticket or for the senatorial races. And that over the years has been a very, very accurate measure. This time, apparently, in the swing states that have taken on a great deal of importance, it appears that the electors have voted Democrat for the president, but not voted Democrat down ticket. So you've got this divergence between support for the president and support for the presidential candidate not being matched by support for the same party's senators, which is kind of interesting, isn't it? Because you wouldn't actually think that happens very often, and apparently it doesn't. But you can read it for yourselves anyway. There's more to come. There's a great deal more to come everywhere, isn't there? Anyway, our business is the business of financial markets. So let's move on. Sue Assini's just joined us. Hello, Sue. Great to have you with us. Sue's a lovely lady. She's done a tutorial and a very, very keen trader. Okay, gosh, a lot of people are coming in a bit late. If I've missed saying hello to you, Gig is over there in North Carolina. Good to have you with us. Gig, he's a long time trader, very, very knowledgeable, done a Daniel Code tutorial, and was kind enough to say that he's learnt more from his Daniel Code tutorial in a week than he has in the last 30 years of trading. Anyway, let's move on, folks. We'll be here all day otherwise, which wouldn't be a bad thing. I love talking to you all. Okay, so markets are rational, orderly, and sometimes predictable, as you can see. And the Daniel Code is a set of proprietary ratios that control time and price in all markets. And oh boy, hasn't the trading been fantastic? Let me see that I've got everything here going and working. Yeah, looks like it is. That's grand. Okay, so we talked at our last webinar about risk, and this is the corollary to it, reward. And here are some of the elements that go into getting those reward. I had a couple of comments during the week on the last webinar saying they were so amazed that our tutorial guys who were trading a sample, a 2016 calendar year for natural gas, were getting a win-loss ratio of about 58 to 60%, but the average win was greater than 2 times average loss. And I think that sort of blew their heads off a bit. But next session, we're going to expand on that, and I'll show you those same sort of results through other periods of time. Okay, so that, of course, is the trader's nirvana. If you can get just a reasonable, I mean, the Daniel Code doesn't have a very high win percent. I can actually easily enough give you a program that'll run at 90% win, but it actually doesn't make the money. And the optimum amount of the money-making business, which is what we're all in our trading futures and Forex for, is to have a better than 50% win rate. We expect we'll be around somewhere between 55 and 65, sort of just around 60, a bit less, bit more most of the time. But our average win is at or greater than twice average loss. And you can work that out for yourself. Anyone who's a follower of statistics at all can show you how if you had that sort of a win rate, but you simply had 1.5 times win being 1.5 times the loss, theoretically, if you live long enough and trade long enough, you finish up with all the money in the world, all the money you could ever need anyway. So let's talk about these elements of reward. Market access is the first one, and it's a wonderful business, this, because, you you can trade from anywhere as long as you've got an internet connection, and you can trade from anywhere in the world. I know you probably all seen those videos of gentlemen with making lots and lots of money trading futures, lying by the pool with beautiful young girls all around them. I would have thought the beautiful young girls would have been a bit of a distraction myself, but nonetheless, you can trade from anywhere. I've traded in airports while I've been on between international flights and between legs of international flights, but market access is pretty well unlimited, and you don't need a ton of money. Once you have a winning system, the longer you trade, the more money you make. One of the important things in these elements of reward is market selection. It's very, very important that you stay out of dead markets. Markets change their nature. They go from expanding to contracting to expanding to contracting. And they can have long periods of consolidation where the buy signals get elected but don't go far enough to give you a profit. Then the sell signals do the same. In oil, for example, you can see that consolidation pattern go on for up to a bit over, in fact, over a month at a time. So getting caught in a consolidating market's a big no-no. That's the only time, if you're trading the Daniel Code trading program, that's the only time that you'll consistently lose money. By that, I don't mean that we don't have losing trades. We have a lot of losing trades. About 45% of our trades are losers. But it's that ratio that the winners are so much bigger than the losers that enables the Daniel Code to make more money than any other trading system that I'm aware of, at least. And that leads on to portfolio approach. Ideally, with your trading, if you can, if you've got the financial wherewithal to do it, you should be trading a number of markets. And that's because, so far as I know, there is no way to accurately and systematically forecast periods of consolidation. We have a couple of methods that you'll be able to identify to say, this looks like it's a high probability of being in a consolidation, but you'll probably have had 2 or maybe even 3 losing trades by that time. So by going to a portfolio approach, by using a number of different markets that are not correlated, the probabilities rise exponentially that some of those markets will be trending and be highly profitable if you do get stuck in 1 or 2 that are consolidating. But make sure they're not correlated markets. Now, all of the equities and Germany's DAX are very highly correlated. They're so highly correlated, in fact, that a Daniel Code signal in any one of them can be executed in any other. So if you are looking for a signal we might have in the S&P, for example, you can take that signal in the NASDAQ or the Dow or the Russell, provided the trade is elected. The orders are most important, and in those orders, what we do is we create the orders for you. We put them into the website, and it tells you where to enter, where your initial stop goes, and you're on your own after that. When you're trading price, some people like to get targets, and those targets tend to be mechanical. In other words, lots of people say, I'll get 1.5, the target will be 1.5 times my stop loss, or some mechanical approach like that. I haven't found that entirely satisfactory by any means, but over the years, I mean, this is the next month, folks, will be 12 years since we first released the Daniel Code to the public. And over that period of time, we've done more and more work on trading time signals, which are quite incredible. And of course, they overcome the problem of having to find targets. You just are in the trade until you get either stopped out or you get a alternate trade in the other direction. Self-discipline is a massive, massive part of trading. All my tutorial folks trying to have that self-discipline. What's Rob saying? He said, hard to identify consolidated markets. Yeah, well, you can use the Daniel Code signals, Rob's saying, to when they may break out. Yes, we can. But while you're in that process of consolidation, the first 5, 6, 7, 8, 9 days can go by without giving you a reliable signal that you're in a consolidation. Self-discipline is the biggest thing, and that goes along with excellence in execution. You must stick to the system. The answer to every query is stick to the system. The self-discipline is an issue that almost all of my students who do the Daniel Code tutorial will raise because they have an expectation that they think they know what the market's likely to do tomorrow, and they're biased towards that view. And that's the problem with even in trading stocks, the idea that's so prevalent that there's a narrative and that you trade according to the narrative. That doesn't work in futures, and you don't need that stuff at all. In fact, when you know how to trade the Daniel Code, the whole theory of it is that the last completed bar on the chart has all the information that you need to create the orders for tomorrow that will give you optimum profitability and optimal risk management. But you need the self-discipline to follow the system, not to let your head get in the way, which happens to almost everyone. So I've taught a couple of airline pilots. I know Sue will probably be with us now. If not, she'll see the webinar, see the recording tomorrow, talking about getting her son. Sue's done a tutorial with us. Very, very good trader up in Cairns, Queensland. Getting her son, who's an airline pilot, and out of a job, of course, because there's no international flights in and out of Australia. That's not strictly correct. There are some, but they're government controlled mainly. It's trying to bring Australians, residents home. But there's no normal access to international flights. And she's talking about him doing a Daniel Code tutorial session to learn how to trade. And pilots make excellent traders. So do engineers, incidentally. Dan Kay is doing another tutorial with me. Actually, did his first tutorial in Colorado Springs, a live tutorial back in about 2010, 2011. But he said he never actually really got it. He wasn't quite ready for what the Daniel Code is. And he's now done another tutorial, and he's absolutely on fire with his trading. So that self-discipline, get rid of the other ideas in your head, follow the system. That's where the money is. Okay, let's move on a bit here. Here's your market access. The choices of market access are just massive. I mean, honestly, you have no idea how big these markets are and the various off-market transactions that relate to futures, forex, spot trading, hedging, management there. I mean, if you can think of it, it's probably been done already. And apart from the standard exchange-traded futures and options and spot forex, CMEs, CFDs, spreads, you can get any of the big market makers will make a book for you if you're a big enough trader and respected enough, and they'll create a special purpose instrument to handle your trades. And that's what Dr. Berry and the others did when they were betting against the US property market back in 2007, 2008. As much as you like, whatever you can think of, you can get set for. So when we're creating signals, your trading style is governed by your own risk profile. Really small risk leads to smaller time frames and vice versa. And I know we have a number of people who like to trade the nice shorter time frames. Peter Kay's one of them. He's got a post up saying nice $50 session in gold. He's a real short-term trader, and that's his passion, which is great. And you can adapt the Daniel Code. It will work exactly just as well on short-term trades as it does on daily trades and longer cycles. But for us, the Daniel Code, the selection of the time frames we use to create signals is governed by the quest for profitability. And in my experience, trading daily bars is the most profitable way to trade futures and spot forex, and that's why the programs that actually create orders and the Daniel Code tutorial, now the Daniel Code video tutorial, because I'm not allowed out of the country at the meantime, they're based on daily bars. So we use longer time frames for forecasting and analysis, but the risk involved with that mandates that we use triggers always based on daily bars. So if you look at some of that wonderful work that Frank DB does for us with the fourth seal, it's staggeringly good, and I'm going to talk more about that. But if you think in terms of every single bar is a 6 days of trading, or we use 12-day charts and 24-day charts, and the risk on entry for many of those bars is way outside any reasonable risk parameter. So you have to go back to getting your triggers to enter the trade coming off the daily bars. I want to talk to you a bit about the fourth seal. It's a optimum way, in my view, to trade, that you start your trading week on Monday by looking at what we've had to say about probabilities from the fourth seal. Now, do excuse me, these fourth seal reports are done for me by one of my students, Frank DB, who's a Belgian gentleman. He's a farmer in Belgium. And he came to me in 2010, 2011 to a tutorial I was running at that time in Taupo, New Zealand. And he came and introduced himself to me. We have a little get-together before we have a tutorial. Before each session, we have a little get-together, have a few drinks, say hello, get to know each other. And we'll be doing that again one day. We'll be allowed out of lockdown sometime, I assume. But nonetheless, he came and introduced himself to me, and he had his fiancée with him, Anne, a lovely young lady. They've since got married, and they have 2 beautiful children. But Frank said to me, I've never seen a financial chart in my life. I know nothing at all about finance or charting or any of those sort of things. But I read all your articles and I love what you write, so would you teach me to trade? I said, of course. And he came out to a Daniel Code live tutorial in Taupo. And that was the very first time that I taught the fourth seal. And Frank just took to it. He's made that his specialty, and he's become an absolute expert in the fourth seal, which is using time cycles to forecast key turning points. And it's quite extraordinary. If you haven't seen it already, ask Terry to give you a free trial for 14 days, and that'll give you a couple of weeks of stuff you can read. It's absolutely extraordinary. Further than that, in December 2019, do you mind, Frank, might have even been 2000, I think it was December 2019, Frank wrote an article. You can see it at the Daniel Code website. Click on the articles tab, and I think it's just titled 2021. And in that article, he set out his argument. This is back a year and a half ago. And he set out his argument for what the US equities were likely to do. And he said the probabilities are that they go higher all the way into 2021, and then we'll start to see some serious dramas about mid-2021. As we move closer, we'll get more accurate dates for everything. But he stuck with that view, and even, you remember, in the big sort of 24-day flash crash in February in equities, he wrote for his weekly column, he said, it sounds silly, but I still think this market's in a bull market and it goes higher. And various people took that to mean that probably Trump would win the election because he's such a great showman, such a good spruiker of markets. But anyway, the jury's still out on that, but the market loves what's happened, doesn't it? So in this process of doing the 4 Seal, Frank has become an absolutely superb trader himself. There's a guy, never seen a chart before. He came to me to do a Daniel Code tutorial, and he's now one of the best traders I've ever seen. So have a look at this. In fact, we should just go back and catch what he's saying about it. He's saying this top column is last week. This column, this paragraph is this week, and he's saying active bar running has a 70.89 cluster cycle low. Odds are the market finds support on the election week. And he goes on with it and says the DC signal will guide you. Well, look what happened. This is the Daniel Code members chart of the S&P Emini. And as you can see, there was your target recognition. Let me find this on another computer here so I can talk to you about it. ES, here it is. What actually happened here, and it's unusual. I mean, this is a... This is unusual. We got this beautiful key reversal bar right on the Daniel Code blue line here, 332475. The actual low of that bar was 3225 against 322475. So one tick difference in a number in the 3,000 range. Extraordinary. But the signal actually came a day before that. And what's uncanny about these charts is they do this all the time. As we move on to the other markets, you'll see we had a fair bit of chaos over the election day with these massive bars, most from outside bars, as the mood of the market changed during the day. But this signal's actually created on Thursday of last week. As the note on the chart says, target recognition is valid at either the bar high low or on the close. This is the latter. So the close of that bar is 3275.50 against a blue line at 3277.50. That's 2 points variance. That's 8 ticks variance. Like in a number like 3,000, where there's 12,000 potential ticks, it's like nothing. We say that we expect this target recognition to be within 0.1%, not 1%, 0.1% of price, but in effect it's much better than that. So then you got this key reversal bar on Friday, which hit the blue line almost perfectly. Look where it closed. The close of that bar is 3278.25 against the old blue line of 3277.50. So I say that markets know and understand these numbers. In fact, I'll go further than that and say markets are actually trying to tell you what they're doing by how they react at these various numbers. It's just that until we got the Daniel Code, we didn't understand any part of the language of markets. Now we understand a little bit, and what these markets do at these Daniel Code numbers is really extraordinary. And have a look where we've had a massive couple of days of volatility and drama and everything else. Look where this market closed today, 3511.75, and there it is, right on the black line. Couple of points difference is all. Extraordinary, isn't it? So anyway, let's move on. We know that target recognition sits there. And what else was there? We'll have a look. This is a time chart, Daniel Code time chart of the S&P Emini. And I've been showing you this chart now for months on and off. And you can see from here that the previous big swing high back in September, how we got that pretty much to the day, how we got the next low early October to the day, rallied up, then the next high, we got that. I put all the numbers on there. And this low that we've just had, this is in equities, of course, this low that we've just had on October the 30th, have a look at it. We had at least 5 time cycles expiring on that day. or within one bar. All of these time cycles are valid to plus or minus one period, and that's because the lunar cycles, apart from anything else, if they fall on a Saturday, they'll be on the chart for the Friday. If they fall on a Sunday, they'll be on the chart for Monday. So they shift by one day. If you want to go to the extent of trying to plot all that on a calendar, a full solar calendar, good luck. It's actually not necessary because the accuracy of what's available at the moment is so good. You can see there's a 70 cycle sitting right on that low bar, just where we expect a turn. Extraordinary stuff, isn't it? Let's move on and have a look at oil. This is the Frank DB's wonderful comment on oil for the week on Monday. He says there's an 89 cycle low, now running. We thought the 59 would be a high last week, as it should be. Frank, there's no such thing as should. Likely is a better word, but more evidence piles up that could invert into a low. We should see a rally forming this week, or at least some support of the decline. The DC signals will guide us. We wait for an elected buy signal. You see how the end of all these commentaries are, you need an elected buy or sell signal to get into it. Well, how spot on was that? This is the crude oil chart. Members crude oil chart, and where we can see exactly as he said, down it went, a key reversal bar on the Monday, and up it's gone since then. Well, the actual signal, you can see Monday was a day of great drama, huge, massive outside bar, massive key reversal bar, a bit sloppy all over the place with the drama that was inherent in that day, but the signal, the buy signal, actually came 2 days earlier on the Thursday in exactly the same way as the S&P. And you can see there's a tag there saying target recognition is valid at either the bar high low or on the close. This is the latter, meaning this is the close where you get target recognition. So the close of that bar is 36.17. Look at the blue line, 36.17. Zero variance. Perfection. Wonderful. Happens more often than you think. Incredible. And Frank's comments at the beginning of the week on Monday have been completely borne out. And that's how brilliant this fourth seal is. It really is amazing. So did I jump a page? No, you've seen all that. Let's move on to gold. Very important. Particularly, we've got Rob with us today, our chief of the gold bug. Lovely guy. Akshay joined us. Hello, Akshay. And Rob was so hospitable to me when I was doing a tutorial in Reading. He's a lovely, lovely man, a most generous and gracious host, and loves his gold trading. So here was Frank's weekly outlook, and he's saying odds are we see a swing low here and move up into a swing high later this week or early next week. This swing high should mean we see a counter-trend rally here this week. The DC signals will guide us. Cycles suggest a short-term support is at hand. Great. Have a look at the Daniel Code members chart. Here it is. Almost exactly as the fourth seal commentary forecast. I mean, extraordinary. And there was the last bar. This signal actually came for Friday. But Thursday's bar, you can see there, had a low of, let's move that chart up a fraction, had a low of 1859.2. Have a look at the blue line, 1858.6, about a 1.5 difference. A number like 1800 in gold has 18,000 ticks in it, and it's picking them up within a handful of ticks. It's quite amazing. And you can see there we got the little annoying counter trend, which is sent to try us on Wednesday. And we lost about $1,600 on that move. We used a discretionary trading stop because the sell was against the trend. But overall, this move made some part of 6,500. So $5,000 net for just knowing your Daniel code numbers and reading the signals off. And look where it's gone to. Look how exciting this is up here. 1954.3 is the high of this dramatic impulse-driven high today, emotional-driven high as well. And the DC blue line, 1953.2, the high today, 1954.3. Just a bit over 1 point, isn't it? Extraordinary stuff. Okay, let's move on. We don't stop. And here's the next chart for me to remind you, don't forget the correlations. Now, some of these markets are so highly correlated that a signal in one can be executed in any other. All of the US equities and Germany's DAX are highly correlated enough that a signal in one, you can elect to trade it in any other of the equity, the correlated markets. And in the same way, gold and silver are so highly correlated directionally that a signal in one can be taken in any other. So the buy in gold, if you want to trade silver, and I know a lot of you do, then you could have taken that trade in silver. Well, as it turned out, you didn't have to, because there was a TO3 buy signal on silver, which was created. Let's move on here. Was created. Here we are. Here's the low, folks. That was Thursday last week, 1029. There was the low, 2262.5. And where were the Daniel code numbers? 2263. And of course, silver moves in half a point. That's the tick value of it. So the difference between 2262.5 and the blue line at 2263 is one tick. One tick. Look where it stopped. And that's what created the TO3 buy signal, which roared up. It also had that counter trend bar on Wednesday of this week. If you're trading as closely as we generally do, you had to get short there, but use your discretionary dollar trailing stop because it's against the apparent trend. We were stopped out. We actually made 2100 on that sell bar, the outside bar, and then you just buy the high to get back with the trend, and off it's roared. It's just been absolutely terrific, hasn't it? Okay, let's keep going. This is what you do with your trading. And we also, of course, trade spot Forex. And it's just exactly the same as futures. It's just as accurate. It's just as precise. It follows all the usual Daniel code rules. It's exactly the same. The only variance is that when we're trading spot Forex, instead of using our traditional two-tick buffer to create the entry signals and the stops, which is 2 ticks above the true high or 2 ticks below the true low of the setup bar, we use a 5-tick buffer if we're trading Forex, because there's no central exchange for Forex, and the prices are created by the supporting banks. All of these Forex platforms have a panel of banks that support them, are supposed to provide liquidity for them. That disappears pretty darn quickly when you most need it, but nonetheless, that's what they all say. But because these platforms can have different parts of the world, entirely different banking groups supporting them, we can get some small variances of true high, true lows, which are vitally important to us for the trading, because that's our entry point and our initial stop loss for most trades. So we use a 5-tick buffer, but apart from that, it trades exactly the same. Have a good look at this. This is the British pound against the US dollar, and much the same thing. Here's your signal on Monday. Where's the low? The low of that bar is 1.2854. Where's the Daniel code blue line? 1.2854, and that number's been on that chart for weeks and weeks. Okay, the members charts are available on the website. You can see all this stuff. Every time I create a new members chart, which we do twice a week, they automatically go to our archive box. So for those of you who really want to see this stuff, take a few moments, go to the Daniel Code website, click on the link on the home page that says archives, and in there you'll find over 30,000 of these charts that I've created by hand in the last 12 years. And you'll really be hard pressed to find a market that's ever turned anywhere except at one of the Daniel Code ratios. It's amazing stuff. So here's British pound, US dollar, nice $1,900 trade for us, doing exactly the same thing, running down into a blue line at 12854, with its low at 12854, zero variance. How nice was that? Buy the true high, and off it goes. Terrific stuff. Easy $1,900 per one contract. This is soybeans, and it's moved up into another range. When you see the new charts on Sunday night, you'll see where that new range is. But here it is. We had here, folks must be tired of counting your money, I guess. What a super week's trading it's been, just marvellous. So here was the setup bar for soybeans, came on Monday of this week. The low of that bar was 1045 carat 0. Have a look where the blue line was, 1045 carat 2, that's one tick. This market, like all the grains, moves in quarters. That little arrowhead figure is called a carat. And so that bar bottomed within one tick of support of the Daniel Code red line, and that created a TO3 buy signal. It was elected the next day, off it went, $2,350 per one contract. Marvellous, isn't it? Note that stochastic here never got into the oversold position. I put stochastics on these charts. They're a reliable, they're a very old-fashioned indicator, but all indicators are much the same. The old argument that W.D. Gann used to about quite correctly was markets can stay overbought much longer than you can remain solvent. So here's a great example of the problems with stochastics. Here we are. This is right at the very beginning of November. We've gone to overbought, and we're still overbought around about the 16th, 17th of November. It stayed overbought for all that time. And that's what all indicators can do. Interestingly, although we do put stochastics on our charts for you, there are only very, very few circumstances where we actually look at a study like a stochastic or a momentum indicator. We do use them for blue line trades, but almost all of the Daniel Code trading, the time trading at least, doesn't use any traditional chart studies at all. So there was soybeans, did a wonderful job for us. Same thing. What makes these markets turn? It's a subject I devoted 20 years of my life to, maybe longer. Yes, much longer now. I must be getting older. I've been trading futures for about 28 years now, and spent a whole lot of my life thinking about them. Wonderful, wonderful business to be in. I hope you're going to join us. Okay, that was soybeans. This is T-bonds. This is another one of those. I'm going to say quirky. It's not quirky at all. It's perfect. It's what happened afterward that's quirky. So on US T-bonds, very good trading market most of the time, it actually had its setup bar came from Tuesday of last week, November the 3rd, and that bar, the close of that bar was 171 carat 14. You can see the blue line at 171 carat 16. That's 2 ticks variance. That's target recognition. And its target recognition, as I put here in the note, is valid on either the bar high low or on the close. This is the latter. It's the target recognition on the close in this case. but it could just have easily have been the low going down. That bar there from Thursday, from Tuesday, I should say, that's the bar that created the TO3 buy signal. Now, all the drama came on the next day. It rushed down. It breached the lower blue line at 170 carat 11. Its low was 170 carat 7. Not much if you think about it with all the drama that was going on, was there? 4 ticks. Amazing. But then your buy signal's elected, and off it goes. So it made $1,600, and I was looking for something, but it might not be on this particular chart. Anyway, you should be getting a great feel of how these markets work. So this is the NASDAQ, and we don't publish a chart of the NASDAQ, but we cover it, and we put the signals out for you. Look what happened with the NASDAQ this week. Same thing. Think of correlations if you want to know in an overview sense what the NASDAQ like to do this week. Read the fourth seal on the S&P. It'll move very similarly. This was a marvelous bit of trading here. We had a black line on this chart at 109.47. I'm not sure if I can get that up, but the low was the bar before it actually created the first signal, and then the next signal came on the low, which was let's see where we are, which was the key reversal bar that came off Friday. Key reversal bars, incidentally, don't get too excited about them. They're very good trend indicators if they're with the trend. They're not particularly good trend indicators if they're against the trend. So in this case, we just had a normal down. We had a Daniel code black line at 109.47, and there was the low right on at 109.46 or thereabouts. And the trade was elected. All our trades have to be elected. Once we've done the analysis for market and we think we know what it's doing, that is, it's found Daniel code support or resistance at the Daniel code numbers, and we have at least a minor time cycle expiring for that day. We don't just say we'll buy the market or we'll sell the market. We're not that presumptuous, and that would be arrogant in the extreme, because you'd also lose a lot of money, so it would be expensive in the extreme. But what that allows us to do, it allows us to create an entry point. And for all of these trades that we create, they have an entry point, an initial stop loss, and that stop loss that's taken out is essentially going to be a failure point for that trade. This certainly wasn't a failure. 109.7 was the first of the two Daniel code black lines. Stopped at that number on the Thursday. Friday did a key reversal bar, set up again. Buy the high, off you go. $17,760 per one contract for simply putting on one trade and knowing that trade was there. And that was one of our TO3 plus buy signals for Tuesday. Posted on Monday night. So I said the things we post on Monday night come from Monday's trading. So this signal was actually created the day before the key reversal bar, which is showing there. But the trigger to enter was the high of that bar plus 2 ticks being taken out, which happened the next day, and off it went. It's a good lot of money, isn't it? Wonderful. RZB just now. Would we have been stopped out on the outside bar before it? On the S&P, on the T-bonds, yes. That's right, Sim. Let me have a look at that. Yeah, we weren't stopped out in the outside bar. We were short going into the outside bar, and we'd been short since October the 29th. So we just got long at the high of the outside bar. Sorry, at the high of the previous bar, which was Tuesday's bar, at 177 carat 28. Add 2 ticks, 172, I should say, carat 30. We're long there, and off it went. Was the most dramatic of our trades, as you've seen. The S&P made about 10,500 to today's close. Here's the NASDAQ, 17,500, a bit more. Dow the same, Russell a little bit more subdued, all doing the same thing. So don't forget the correlations. There was no specific buy signal for the Dow. It didn't set up that way to give us the buy signal, but we always have the correlated trade. So in other words, if we've got a buy signal as an example on Dow, NASDAQ, Russell, S&P, or Germany's DAX, and the trade is elected, which means that on the market that's creating the order, if that trade is elected, which will be at the true high plus 2 ticks or the true low minus 2 ticks, then you can immediately go and enter on the correlated market. In this case, I know a lot of you like to trade the Dow. It just worked exactly the same. And off it went. It did not have a specific signal for the Dow, but the correlated, don't forget the correlations. All of the US equities plus Germany's DAX, and separately gold and silver, highly correlated. A signal in one can be executed in any other. So the whole point of what I'm trying to talk to you about, and a lot of you here, of course, are long-time clients of ours, and you know a whole lot of this stuff, but from a person who doesn't understand or is not interested in the Daniel Code, what makes that market turn on this bar? This is the NASDAQ again, still. What makes that market turn? This market's in a steep trend down. There's plenty of volatility moving down the downside. All of a sudden it stops like it's been shot or hit by an express train, even better, and it turns around and roars up. Now, if you're looking at this chart, there's just no possible reason for it. And if you're using traditional studies in the same way as stochastics can stay overbought a lot longer than you can stay solvent, all the other studies have much the same problem. They're not sensitive enough to time to actually bring this down to a 1 or 2 day focus. So what makes this a high probability turn? Why are we excited about any Daniel Code signal, but this happened to be a particularly good one because we had so much volatility. Incidentally, why are markets loving what's happening in the political system right now in the States? Well, the answer seems to be, and I think it's correct, the high probability of this current election is that the Republicans keep control of the Senate. The Democrats have control of the House. They've lost a few seats there. Nancy's not popular anymore. But when the two sections of Congress are split like that, it's very hard to get anything major done. Trump's had this issue for the last 2 years. Obama had it for the whole of his second term. You can't get anything really significant like large money bills, large changes to institutions done unless you have the House of Representatives and the Senate agreeing. And when you've got control of those two institutions in different political hands, not much gets agreed depending on the nature of the people involved. But of course, the head of the Republican guys in the Senate, old Mitch, very tough old guy, been at this business a long time and knows exactly what he's doing. So let's go back to this issue that if you just see that chart, why does the market turn on this bar? What would make you say there's a high probability chance that this market's going to reverse after it's been in a fast, dramatic downtrend? Well, have a look at this next chart. Okay, have a look carefully. It's the same chart. What we've put on it are those horizontal arrows going from left to right. They're the expiring time cycles. And there are at least 5 Daniel Code time cycles expiring on the low bar or within 1 day of that bar. And there you can see the chart right there. So at least 5 Daniel code time cycles expiring on 10:30 or within 1 day of that. You can see the ends of those arrows are when those expirations happen. What else is there? There's a Daniel code black line at 109.47. What are the Daniel code black lines? They're the last level of support or resistance in any market. And it stops them like a train. The black line, folks, just to remind you, I haven't talked much about it, is that it trades slightly differently. The other retracement lines, the red lines, work on the high or low only. The black line works on the close. In other words, quite often you'll see the market breach that black line, but close above it. That's the black line has this propensity more to work on the close than any other of the indicators. So there's your Daniel code black line. You hit on it perfectly the day before and the lead up to it. There it is, right on the bar, I should say. That's October the 30th. Look what else you've got. There was your TO3 plus buy signal. I put that there for you. We had a fourth seal angle exactly at the low, and I do mean exactly. And the previous swing before that swing high, this is in early October, that gave us a fifth seal angle. Okay, in the litany of the fourth seal, there's also a fifth seal. The fourth seal comes from a high before the high or a low before the low, and it runs through one of the colored bars. If you're working on daily charts, it has another requirement as well, because once you go from 6-day, 12-day charts, which this whole fourth seal was designed for by me, you get a whole lot more inside and outside bars. So we make it a bit harder for the fourth seal to give us a signal at that low. A fifth seal also starts from a high before the high or a low before the low, and it goes through a swing high or a swing low, as you can see there. So we've had two of our main time indicators, which the fourth seal and the fifth seal are time and price. They're an angle. Every angle has elements of time and elements of price, which it does. And you can see there are at least 5 time cycles expiring there, and we've got a perfect target recognition at the DC black line. So as we say, when time and price are squared, a turn is almost inevitable. And note that for this particular chart I'm showing you, all of those signals have come from Daniel code price and Daniel code time. There's no studies on this chart. There's no stochastics, ASX, RSIs, nothing, momentum, nothing. It simply comes purely from that Daniel code number, the resistance, the support in this case of time, and support of price. So when we've got both of them, when time and price are squared, a turn is almost inevitable. Now, I actually borrowed that expression, when time and price are squared, from Mr. Gann. I was a Gann trader for 12 years and spent a not so small fortune trying to learn all about Gann, including having people in London and San Francisco buying supposedly original Gann charts, supposedly original Safarial letters. Who knows? There's a whole lot of, Mr. Biden would say, malarkey goes on in that particular part of the industry. But I was so heavily invested in Gann before I found out the real truth about it that I thought I'd better keep some of it. So, but what we mean when Gann talked about time and price being squared, he meant that a closing bar was on one of his support lines, 1 by 3, 3 by 1, 1 by 1, 8 by 1. He had these angles on his charts that went across a certain amount, went up a certain amount. And when you got a close on one of those charts, he would say time and price is squared. We don't mean that. What we mean when we say time and price is squared at the Daniel code is that we have price at a known, recognized Daniel code target number. It may be one of the retracements, the red and black lines, or it may be one of the extensions of the range, the blue lines. And as well as that, we have time at a known identifiable Daniel code time cycle. And they don't have to be the same. So we're not looking for the price to be at the 89 retracement and an 89 time cycle. It does happen, but very, very rarely, much more common. We have time at a recognizable Daniel code ratio. We have price at a recognized Daniel code number. And when those two things happen together, return is almost inevitable. So you've had a great week's trading at a time that I thought could have been potentially very difficult. So don't forget our analysis of time and price across 30 futures and forex markets creates daily trade signals. Once we've done that analysis, we never assume that the market agrees. That would be presumptuous. After the analysis, we create entry points and initial stops for each market. We post these for you. The markets need to move to those entry points to elect the trade. When we've entered a trade and it's got to the number and we're in, we say the trade has been elected. That's what it means. All Daniel code orders are conditional until elected, and there is a failure point for each elected signal. Okay, so here's the difference. Daniel code is based on a set of these unique numbers. They're not fibs, they're not old highs or lows. In fact, unless you're a DC member, they're like nothing you've ever seen before, because they come from a totally different place and a totally different time as well. And the Daniel code time signals work on exactly the same set of ratios. It's just one set of ratios. And some folks get a bit uncomfortable with numbers, but you don't have to calculate the numbers. In fact, we do all the work for you. If you're one of those people who said, look, I'm not really strong with numbers, I'm not comfortable with them, don't worry about it. If you can count to 3 and tell the difference between blue and red, I can make you a super trader. So remember, all markets turn at and only at the Daniel code numbers. In fact, all markets are ruled by the Daniel code. Don't take my word for it. Go to the Daniel code website, click on the massive amount of previous charts that are all stored there. It's called Chart Archives. Be patient, it takes a while to open. It's a very, very big file. Okay, so folks, do we offer you value as well, do you think? From Monday to Wednesday this week, from our time and price signals, we created 14 forex signals and 14 future signals. Of these, 28 signals posted, 24 were elected, almost all were profitable. Some were hugely profitable. And the standalone time signals, which I teach in the Daniel code tutorials, and I haven't talked about today, they were just as good, if not better. So if you want to be a super trader and join the elite, please email me, jneedham@thedanielcode.com, jneedham@thedanielcode.com. If you'd like to talk about the Daniel code tutorial, send me your phone number and where you live, so I don't inadvertently call you in the middle of the night, and I can take you from whatever level you're at now, including complete novice and never seen a chart, to an experienced prop or private trader. And if you stick to the system, it will make you a star. Okay? And you will need determination and dedication, the rest I supply. For those of you folks who are subscribed to the website Pro, remember that you're entitled to 2 free success markets. Let Terry know. You can change them every month free of charge. You can change them more often if you want to pay $30 a time. And all DC signals are conditional until elected. We show you the price at which trades are elected. See the trade program link at our website and the success signals, which have rattled up a wonderful week's trading as well. So that's it, folks. The business of trading is making money. If you haven't already had a free trial, please go to the website, www.thedanielcode.com. Just hit the register button. It'll start your free trial. Any issues, and if you've previously registered with us and the website's already got your email, it might not be too happy to give you a free trial. So any issues, that's just a mechanical issue. Contact Terry. He's our webmaster and IT consultant. He's at support@thedanielcode.com. He's actually up in Canada. And send him an email or look at the website. There are other ways to contact him. You can text him, etc. And he'll fix up any issues for you. Finally, folks, this is our disclaimer. I do seriously want you to read the disclaimer. And the main part is that the risk of loss in trading commodities or futures can be substantial. And if you don't know how to trade, I beg and I implore you, do not spend real money, because probability is extremely high that you will lose that first bank. Learn to trade first. Put the effort into learning to trade, and from then on, once you know how to trade, you'll have it for life. It's like riding a bicycle. Once you know, you never forget. And you've got a wonderful future open to you for the rest of your life. Okay, so what have we got here? A couple of questions. Sue's here. Tax cuts by Trump cannot be overturned. Plus they'll get more dollars. That's so. Any divergence creeping into US bonds on the daily? Asked Akshay. Let me tell you that. I will give you an answer in just a second. Akshay, yes, there is divergence today. The market made a new high today, and the momentum indicator thinks that the momentum high was yesterday, Wednesday. Okay, and Hank, when will this get posted? I have a couple of mates. I want them to see it. After we finish this, Hank, it takes about 8 or 9, maybe 10 minutes to process. Then I send it to Terry, and he converts it and he posts it up on the Daniel Code website tomorrow. That's actually a link to our YouTube channel, and it is sometimes done the same day. It might even be up late today, but unlikely. It will be posted by tomorrow. Remember, excuse me, even though I'm an Australian and live here in Queensland, as you know, Hank, the website is based in the States, in Denver, Colorado, actually, and it runs on US time. So tomorrow will be their Friday, and it's, where are we? We're now 9:37 p.m. on Thursday night in the States. So that's it, folks. I hope you enjoyed it. Any questions, please shoot me an email. Anything you particularly want me to address at our next webinar, please shoot me an email and I'll be able to get it all together for you. And I thank you for being with us today. I do hope you've enjoyed it. I do hope you made all the money that was offering there from the Daniel Code this week. It's been a great bit of trading. Nice to have you with us, Brent, and Murph have called you as well. And Hank, always grand to have you with us. Okay, folks, all the best. It's Friday afternoon here. I was going to say it's a beautiful day, which it is. It's a glamorous day. It's time for me to go to the pool and drink some Bloody Marys, but the reality is that's not going to happen because I have a tutorial coming up in a little less than 1 hour. So you enjoy your weekend, folks, and anything you'd like me to discuss at our webinars, just let me know and I'll get something together for you. All the best for now, and bye-bye, and thank you for being with me today. Bye-bye.